Hello, I am Gökçe Çalışan. I am a risk manager at Dexalat, and I'm working here for a little bit more than 2 years. And today, I'm sorry. And today we have Tim, our COO, with us.
Hey, Gökçe.
Hi, welcome.
Thank you. I think this is our first time seeing you on our live stream.
Yeah, actually, like 3 years ago, I was on one of your videos.
Oh, okay. I apologize.
Yeah.
This is the second time then.
Yeah, a lot of time passed since then. We are going to have a new video. This is the first one of them. I'm a financial engineer. First, I want to a little bit mention about my background. I'm a financial engineer with a master's degree, and I have 5 years of working experience in crypto. Before Dexalat, I was working at one of the leading centralized exchanges in Turkey. I was a treasury manager there, and I had my own YouTube program, and I was doing daily analysis back then, and I'm a regular on television in Turkey as well. So we thought, why not do it here as well? So this is the first time.
Yeah, I think she's downplaying her regular on television. I mean, you've been on CNBC, you've been on Bloomberg as well in Turkey. So I think congrats to you. We have an expert here. That's you could find her quite often on all the major financial stations in Turkey, right?
Yeah, thank you. So today it will be shorter, as it is my first time talking about market in English. I feel a little bit nervous, to be honest. And then Tim will be given some information about our roadmap, what's going on in Dexalat, etc. So I'm starting then. I will share my screen. So, okay, looking at the Bitcoin price, today we had this CPI data, US CPI data. The expectation was 2.9, and the realized was 2.8, so it was below than the expected. So it helped to the market a little bit, just a little bit, but the price was up almost 84, but again it has fallen. So what is going on is there's an uncertainty in the market, and there is lack of liquidity. So I will talk about that a little bit, but maybe Tim can talk about the tariffs a little bit. He has some comments on that.
Yeah, sure. So I know that in terms of a CPI, which you just talked about, and I think that's a very good indicator of what can impact the markets in crypto in general. But let me take a step back, right? So what has been the biggest driver of the markets selling off? All markets, not just say in crypto. It's been the tariffs, the very aggressive approach that the new U.S. administration is taking in terms of tariffs. They basically have been talking about tariffs or threatening tariffs on essentially everyone, especially our closest neighbor in the United States, Canada, and Mexico, right? And as soon as those words of tariffs started to trickle out, and then all the flip-flopping of tariffs being on, then it's off, then it's on, then it's off, it's been causing huge gyrations in the markets, and I think we've all felt it, right? I myself I'm probably down in terms of my crypto portfolio. I'm probably down at least 50%, right? So, which I think in general is actually okay, because I know a lot of people who have lost a lot more. But okay, why is the U.S. administration doing these things? Are they just crazy, right? I have a theory. I think a lot of people on Wall Street in finance in general are confused. They're tired, right? But the theory is, 6 years ago, I believe it was during the first Trump administration, they enacted the Trump tax cuts. Okay, the Trump tax cuts are expiring next year. All right, Trump desperately wants to extend the Trump tax cuts. Okay, but you have a problem. The problem is we have a big deficit in the United States. They need to figure out a way to pay for the extension of the tax cuts. Okay, so what are they doing? Okay, one you've heard about Elon and Doge. They're aggressively trying to cut the fiscal spend on the U.S. administration. That's going to help balance the budget more and pay for the tax cuts. Right. The other thing that they're doing are tariffs, right? And the aggressive tariffs will bring in additional tax revenues to the government, and therefore that's another way to pay for the tax cuts. At the same time, I think they're sort of using all kinds of reasons to do the tariffs. They were talking about fentanyl being brought into the U.S. from Canada. I think I read that last year there was only like maybe 2 pounds of fentanyl that was brought in through Canada. I think fentanyl is probably another, is an example. It's not fentanyl. Replace fentanyl with China. Okay. Yeah. So basically, the U.S. administration is trying to also use all these the tariffs to also reduce the amount of trade that's coming through Mexico and China, but ultimately through Mexico and Canada, but ultimately the original source is China. Now China has done quite a bit over the last several years to move a lot of the production from China to Canada and Mexico to circumvent all the tariffs that the U.S. has imposed on China, right? Now, what are the risks, right? We know why they're doing these aggressive cuts and tariffs and stuff like that, but what are the risks, right? One of the problems is a recession, okay? So we've heard, a detoxing of the economy. We're going to go through a very short period of interruption or whatever the wording they're using, but essentially that's another way of saying recession. Okay. Yeah. Now recessions are, I think they're using it very lightly because we could certainly have a technical recession, which I think they're hoping for, but unfortunately, having a recession is a little bit like opening up a cage with a lion inside or a tiger inside, because you just don't know if it's going to get out of hand. Okay. So now let me remind people what a recession means. Okay. It's not just a casual word, right? It means higher unemployment, meaning people are going to lose jobs. And it's not going to be just a few jobs. It's not like 100 people or so. It could be hundreds of thousands of jobs per month. Okay. That means poverty levels will start to rise. Markets will be really bad. You could potentially trigger a market crash. There will be elevated bankruptcies, right? Companies will go, especially the smaller ones, will go out of business. Crime rates will increase. Suicide rates increase in recessions as well. So it's not just an economic term. There's real impact on people's psychology, people's lives, companies, and all that stuff. So recessions are very, very bad. Now, I think this is a game that they're willing to play. It looks like, right? Now, as a backstop, they are hoping that the Fed will come and rescue them, right? So the Federal Reserve will always, when there is a recession, they're going to cut aggressively, right, to support the market. Now, the Federal Reserve acts as an independent party in the U.S. But last year, I did hear that some people, prior to the elections, these plans were sort of laid out because I've already heard that they were planning to do a few of these things, and part of it is they feel confident that the Federal Reserve will come in and start to cut and support their plan, essentially. Okay, but again, there's a certain amount of window they need to they can sort of, there's a deadline to the amount of pain they could inflict on the US, okay? Because the midterms in the US is coming up next year, okay? If there continues to be a recession, approval ratings will certainly drop and they'll lose the House and the Senate, okay? So they really don't have a lot of time in terms of months to get this right. They almost need to thread the needle a little bit, right? So, and inflation, which, by the way, the CPI, as you mentioned, came out a little bit better than expected, better meaning a little bit lower than expected. But keep in mind that CPI data doesn't include the tariffs, okay?
Correct.
So a lot of the conversations about the tariffs happened after the CPI data was captured. So it is very possible that CPI will jump next month. If that happens, I would expect approval ratings will drop. This is the detoxing of the economy that they're talking about. I think that if this causes a recession as well, with an elevated inflation, you have stagflation, and that's a really bad thing because stagflation. Well, one, inflation. Once the prices go up, it's very hard for prices to go down, right? I think we've seen that in terms of the over the COVID years. Just generally, when a price goes up, it rarely goes down. I mean, think about your membership to a gym, right? When was the last time they said, we're going to cut the prices? It's very rare, right?
Yes,
so it doesn't come down. So if you have sustained inflation, if the recession is worse than expected, you're going to run into stagflation, and I think at that point they're going to panic, right? There's already a lot of people yelling and screaming, not just on the Democratic side, but in terms of the GOP. So I think it's a pretty dangerous game they're playing. I think they're very confident in themselves. They do have really good people. Scott Bessent, the Treasury Secretary, is a real person. I mean, he's been on Wall Street as a hedge fund manager for many, many years. He started out with Soros as CIO of Soros. So that's sort of odd as well, because there was a lot of attack on Soros, and the first Treasury Secretary you bring in is a guy who worked for Soros. So there's a lot of weird communications there. Howard Lutnick has been on Wall Street for a long time. I mean, these guys know what they're doing, I hope. I think they understand the things they're doing could potentially create a recession. Now the problem is, can they control it? Well, it's very hard to control inflation. It's very hard to control, recession. So I think it's a dangerous game that they're playing for sure. And the damage has already been done in terms of, communications or their friendship with allies, right? I saw, that there was a survey done by YouGov where they interviewed like 5,000 people in Europe, in different countries, to see who's the biggest threat to them. I think a majority of them said, or I think 80% of them, of the people said that the US is a very big threat, right? So that's a huge number. I mean, if you think about people in UK, 80% of the participants said that the U.S. is a big threat. I mean, that's a big change in just 7-8 weeks, right?
Correct.
So last thing, I just want to mention our key dates, right? What are the key dates to look at? So April 2nd is a very big date, okay? There's been a lot of talk about tariffs and postponement of tariffs and all that stuff, but April 2nd is a date that a lot of people are focusing on because that's supposed to be the date when real tariffs will start, okay? So let's really see, by April 2nd, if all of this is just talk, or they're going to implement real tariffs. Now, going back to what I said originally, they sort of need some amount of tax revenue or tariff revenues to come in to pay for the Trump tax cuts, right? So I think you should expect a certain amount of tariffs on April 2nd. In June, Trump is meeting Xi, and that's going to be very interesting as well to see what that relationship is like. There's been a lot of aggressive talk against China in general, and we'll sort of see what happens there. And then from now until year end, we'll have to monitor the budget negotiations out of Congress, because at the end of the day, in order to do the extension of the Trump taxes, they need all parties to agree on a proper budget to pay for it, right? So that's probably not going to happen in terms of the budget negotiations until probably towards the end of the year, right? And then I think that the last thing to sort of focus on is really how aggressive the Fed is going to cut. If they're going to cut really aggressively, I think it's because we're in a pretty bad recession. Right now, they're expected to cut 3 more times this year.
Yeah.
That's expected. That's sort of based on what happened pre-Trump, right? That was the path they've been on for a few quarters now, right? So it'll be interesting to see if their tone changes, and if they expect things to get better or worse, right? And then I'm going to add one more thing that I think is important for people to look at, which is basically his approval rating, right? He's going to be more aggressive if he feels as though he has the backing of the U.S. The voters. He's going to be less aggressive if his approval ratings start to drop, right? And we've seen just in the last week or so, his approval ratings dipped to, I think, 47% a few weeks ago. And I think that we'll have to monitor that because I think if his approval ratings drop, people in his GOP supporters in Congress and Senate will be pushing back hard then, right? And he sort of needs all of them to work together so he has the power to do all the things he wants to do. But if the GOP or his approval ratings drop, then he's going to have a problem, right? So that's sort of my theory about what's going on in terms of the tariffs. It's a lot to think about. It's a very complicated. A lot of people are saying 3D chess and stuff like that. This is so complicated that it's not 3D chess. I think you definitely need some sort of AI to figure this out. I think there's so many. That there are so many variables impacting what's going on. I do have major concern that one or two things could get out of hand. There could be a stock crash easily. We just heard, I think it was yesterday, that a Millennium fund lost $900 million in the last 2.5 months. So that's a really bad, return for that fund. So if you have, these market gyrations, I know we're all losing money, but think about some of the hedge funds that are highly levered. If most of macro funds are probably down this year because it's just very hard to trade this type of market. But if people are over levered, you could run into real problems and real pain. So
yeah. Yeah, that was a very good explanation, very good summary. Actually, you have covered a lot of things, and I don't know what else to add. Very nice.
Yeah, so I think in general, from my perspective, in terms of people in crypto, just be patient,
Yeah.
stick in there. I think if we get the regulations we're looking for, we sort of got a little bit in terms of the Bitcoin reserve. Those are all positive things. And I think that we sort of need things to just start to inch up a little bit. I think, but I don't think we'll see much for the next 2 to 3 months. Pay attention to economic data. I think if economic data, if I'm wrong and the economy's okay, inflation continues to drop, then I think we're good and the market should rally. But I think right now they're still taking a hammer, or they still have a bit of a hammer, and they're trying to break things as much as possible until they get pushed back. But at some point, it's gonna, they're gonna remove the hammer and replace it with a scalpel. Right.
Yeah, I agree. Also, maybe I can add that maybe people don't know the target inflation rate of Fed is 2%. So currently we are 2.9, and it was as low as 2.7 at the end of last year. We are not at the dip, and there is still a way to go. And as you said, the last, not the last, but the before was higher than expected. So this is nice, but the looking at the price, it didn't get priced a lot because of all the things that you mentioned, the uncertainty. Also, the Trump trade has stopped because markets didn't find what they were looking for. So yeah, maybe other than that, we can a little bit cover regulation side. There were some ETF news. This year we are waiting for altcoin ETFs in United States. And there were some applications on Litecoin, Solana, XRP, and Hedera. And yesterday, SEC extended their consideration time once more. So the next consideration time will be in May, but probably May will be still early for them to approve any of the altcoin ETFs, because the previous SEC was not a big fan of the altcoins, so it will be a opposite side move. They are taking their time, but ETF analysts think that there will be approval this year, 90% actually. So it will be probably around October, as this is the last extension that SEC can take. And I feel like I agree with everything you said. This was a very good summary, and I feel like things will get better through the end of third quarter, I believe. But this time will be a little bit volatile. Also, probably we will go sideways for some time, because
we're probably range bound. It seems like.
Yeah.
Let's see what happens. I mean, crypto is hard to predict sometimes, and it moves really fast. I do agree that the ETFs are all good news. I think that But I think at the end of the day, in terms of crypto, I think it's good to have the ETFs, because I think that still a lot of people are interested in investing into crypto. But I think at the same time, we need to, as an industry, do better.
Yeah.
I think that all the hacks and Libras of the world, it hasn't. The news like that will prevent people from investing into crypto for sure. They'll prevent people from investing into the ETFs. If you think about it, a few of these ETFs I think are way ahead of schedule. I saw there was an ETF for one of the chains that just came out, that just launched this week, and I was like, why do we need an ETF for something like that? Because it seems as though it's more for show as opposed to a real investment product. We need to stop all the showy hype stuff, and I think we need to build some real things. So
I agree. Yeah. Okay.
So well, speaking about that, maybe that's a good way to segue to the roadmap for Dexalot, building real things, right?
Mm-hmm.
So I was on the live stream several weeks ago, talking about our roadmap, and talking about the what we're building, but we've sort of fine-tuned and adjusted a few things, and sort of based on a combination of the market, a combination of certain opportunities we were introduced with, that we sort of definitely wanted to take advantage of. So let me just go over what our current roadmap looks like over the next 7 months. I know Cengiz, our CEO, talked about it a little bit last week as well, but it's always good to talk about it in a different way, potentially, or do it in terms of what I'm looking at. But so first and foremost, we're going to be optimizing our current blockchain infrastructure. Okay, so this we were planning to do this later in the year, but we were given an opportunity to work with a highly skilled engineer in the Avalanche community that can help us really improve the blockchain. So currently, for people to know that currently our block times is 2 seconds. We've always wanted to do something much faster. So we think that with the optimization work we're going to get, it will improve by at least 100%, meaning we could cut the speed from 2 seconds to at least 1 second, and possibly sub-seconds, right? So we're planning to do that. Throughput will increase as well, where we could possibly, today I think we could list maybe 30 to 50 pairs. In the future, after optimization, we could potentially list 100 to 150 pairs. Right. So these are big improvements, and this is actually being worked on right now. We hope to have it ready in 2 months, so very soon. Okay. The other thing that's coming in 2 to 3 months is a new UI. We've been talking about having a new UI for, I don't know, a long time, at least over 1.5 years. So that is actually coming. We are working on it. We're testing a early version of it right now, and that's probably going to come in 2 to 3 months as well. So the next 2 to 3 months, yeah, I think you'll see some real improvement in Dexalot. But on top of that, Cengiz already talked about the Omni Vaults, which is our new name for the community market maker. I want to just spend a little bit of time talking about that. So effectively, what this is you're getting the user experience of an AMM in terms of listing and LPing, right? With the added benefits and the capital efficiencies of a club. Okay, so it's the best of both worlds. A club offers you really good capital efficiency, really an ability to really put in prices or limit orders at very precise levels. But it's also hard to list pairs on. It's hard to supply liquidity to. You need a market maker. You need to negotiate with market makers. You need to find out what market makers do in general, right? And basically with this approach with the Omni vaults, we're going to allow people to permissionlessly list pairs and also supply liquidity. Okay. On the other side of it, the Omni Vault will have a market making bot that will take the liquidity that's been supplied and will do market making for you. All right. So no more need to deal with market makers or understanding KPIs and stuff like that. And generally, we think this is a good product for smaller to medium-sized projects. But for larger projects that are already talking to market makers because they want to list on multiple exchanges, including centralized exchanges, you could use this as well. We can permission certain market makers to add their own market making bots here as well, or they could take the traditional route and just go direct to Dexalot, right? So this is coming in 4 to 5 months. Okay, so it's already being worked on and it's coming soon. And then on top of that, after that, we're going to introduce the governance flywheel, which we talked about. And again, this is an ability. In a nutshell, it's an ability to share revenues from Dexalot, but people will need to stake their tokens. They will need to participate in governance voting, and for that work, they'll get a share of fees. So that's going to really take advantage of all the things we're building, right? The new chain, the faster chain, the new UI, the Omni vaults, especially the Omni vaults, because we'll have more pairs, we'll have high revenues from the Omni vaults, and that we could share on the governance or through the governance flywheel. And that's going to come in 5 to 7 months. So basically, over the next, call it 7 months or so, that puts us into Q3 or so, or Q4, Q4. I think Dexalot is going to be looking quite different. The one other thing I forgot to mention, when we introduce the new flywheel in 5 to 7 months, we're going to be increasing the incentives on Dexalot quite a bit. So right now, we're giving out about $200,000 in incentives per month. You could expect that to increase to probably well over 2 million or so. Okay, so from 200,000 to essentially it could be a 2x, or I'm sorry, 10x. So in terms of incentives that are coming. So the one thing we're not doing right now because of the markets is a new token. It's just not a good environment for doing a new token. I think most people sort of understand that, right? So yeah, a lot of build out in the next 7 months. I think a lot of good things coming in the next 7 months. I think we are basically, even with this market, crappy market, where volumes are way down. I think we're spending the time to build, right? And I think we'll come out a lot better on the other side of it.
Yeah, exciting times will be coming. Yeah, working on a lot of stuff.
All right. So that's sort of all I have. I guess, Gökçe, you're going to be doing a weekly market update, right?
Yes, we are going to have guests as well. If not, I will be alone, or sometimes you will be coming. And yeah,
I'll join you. I mean, it seems odd that you're up by yourself, but yeah, in general, we have guests that we're going to bring on in the future. I think it's great that we're doing this. You know, as an exchange, you should know about the markets. I think we're in a good position to talk about the markets, and you know, really excited that you're you're doing this. You've been with the team for how long now? 2 years?
2 years,
Almost?
a little bit more than 2 years.
More than 2 years, right? And this
Right.
is the first time you're doing this. So very excited that you're going to be doing this. I think it adds us a nice flavor to our offering. So.
Yeah, it was a first good episode. I loved it. Thank you for your comments as well. It was very good coverage of the market.
All right, great.
Yeah. Okay.
Thanks so much. All right.
You as well. Thanks, everyone.
See you next week. Yeah. All right. Bye-bye.
Bye-bye.